Hi, welcome to the Market Alert for Thursday, the 5th of September 2019. So traders buy everything yesterday as uber dovish Fed speak sparks dollar dump, which means the stock market moved higher. And the reason for this, if we look inside of the article, you will see that the comments from the members of the Fed, Williams dovish, Kaplan dovish, Kashgari dovish, Bullard is always dovish, and then finally Evans dovish. But what's interesting about this is this little snippet here, and the market is now pricing in a stunning 124 basis points of cuts through to the end of 2020, and this is what it looks like in a chart. So you can see they're heading next year to all the way down to more or less negative for the Fed funds rate. So we'll see how that pans out, but interesting. And that's what sparked the market moving to the upside. So the Dow moving higher yesterday and also on the overnight. I had a look at 2 a.m. this morning and was surprised to see the market continuing to move higher on these comments. So if we just have a look at this, you'll see prices there driving strongly to the upside following an overnight surge in the Dow futures there. So yesterday we see prices moving lower from the pre-market session, trading all the way down to the 200 bar moving average, and then bouncing off this and trading back up, stopping at the 76% retracement, which is drawn in from here down to here. But once again, that 200 bar moving average like a bit of a magnet and then a rubber band combined, where it sends prices back off it when it actually retraces to it. And if not, then it will break and it will go through the other side. So the market attempting to move higher, but failing to do so. We then get a 76% retracement here. Let me just remove this and just draw this in from this high down to here. Market stopping and then again bouncing off the 200 bar moving average, attracted to it, and then bounced off it, and then prices moving higher throughout the night as we've seen. So let me just select this and then just drag the chart across so you can see. So at the moment price is on the highs but finding a bit of weakness. They may turn around once the European markets open, but given how much the markets put on the overnight, don't be surprised to see prices actually make their way back. News for today, what have we got? Anything important? Not really. The only thing that is going to be out that's worth keeping an eye on is the unemployment change. This at 1:15 p.m. So keep an eye on that one. Meanwhile, in the pound, well, this moved higher yesterday, boosted by, I'll just drag the chart over, boosted by the fact that the Parliament voted for no leave with no deal, which has still got to go through the House of Lords. The bill's got to be passed. It'll be interesting to see if the precedent is broken there, because normally it takes weeks. They've only got until tomorrow evening, and I wouldn't be at all surprised if that goes through. The other thing is as well that there was put to the House yesterday a vote on a snap election, and of course all of those that who have protested and wanted an election during the last couple of years no longer want one. Amazing, really. And that's probably due to the fact that Boris is obviously committed to taking us out of the EU. They've now seen this, and they've got to do everything they can to try and stop him, because they don't want us to leave. And I have said many times to friends and family, we will never leave. They won't let us leave. But that's another story. But it boosted prices yesterday. You can see these moving strongly to the upside when these votes came out. However, overnight prices are just starting to show a bit of weakness there with a sell signal. But in the daily chart, you can see there the big spike to the upside, but staying inside of that sort of downtrend that's developing there. So a bit of resistance around for this market. And again, it depends on whether this bill gets through the House of Lords, which will boost the pound as well. So keep an eye on the news there as well. Meanwhile, in Bitcoin, we'll start off with the daily chart. This for yesterday, market moving higher, bit of volume around as well, but above the 50 and the 20 bar at the moment. It should be the 20 bar above the 50 bar would be more ideal. And so the 20 bar below the 50, and also obviously the 200 above this, which you can see there just tucked away outside of the screen there. So in the 4 hour for yesterday, a bit of volume around, a bit of a sideways move. Why? Well, we're back at the 200 bar moving average, aren't we? We can see this. We need a close above this, convincing close to continue to move higher. So watch for resistance at this level as well. Just grab the 0%. So watch this and just remove that for a second. So 10,879 is what you want to look out for there. And then in the 15 minutes, it was fairly quiet to start with. The market banging its head against the 50 bar moving average. Tried to move higher here, but failed. And again, it's classic. It's so predictable now. You can see the market coming back to the 200 bar moving average before then moving off to the upside. And finally, let's have a quick look at some other charts. 10-year yield continues to invert in the bigger picture, and this is the same in the smaller picture with the low yesterday of minus 0.5, and then the implied volatilities also confirming that the market is destined to try and get back to its all-time high. That's what it's saying at the moment, and when we look at it in the color-coded way, we can see the market's below the 20 bar moving average there, which is what we want in the implied volatility, and above it as far as the prices are concerned. You can see this also. So let's see what happens as far as these markets are concerned. No Deutsche Bank this morning. That's above the 200 bar moving average, boosted by yesterday's European markets, which all moved higher. That will be back tomorrow. Okay, that will do it for this one. Keep an eye on Parliament for the pound, and expect a bit of a punt to the upside in the Dow if it can manage it. They will have to wheel somebody out to do that, I suspect, today, because let's face it, it's what it took yesterday to move the market to the upside, and the prospect of further QE and heading down towards zero or negative rates. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.